Hey guys, Crypto Sniper hat on. Video for today, why the bear bias on crypto and primarily Bitcoin. Okay, so a little bit of understanding here on a number of things. So we're taking a daily view. This is the total market cap. So this is all crypto coins, which includes Bitcoin. I will do one other view that is altcoin only. I've done a premium version for this for my insiders on our premium view, which gone into far greater depth, but I'm going to give a top line skim for you here. During this period, we had a steeply ascending upside HVF. Means one of two things. It'll either fizzle or it's going to dominantly overperform. That was the target it provided for us. That took us through the 250 billion market cap, when at the point that it was funneling, it was around 163. Just bear in mind that that's almost 90,000 on top of 160,000. So that's quite substantial within its own rights. Instead of just stopping at the 250, we went on an absolute ripper towards over performance. And in fact, I did a YouTube clip saying, wow, it looks like we could even see a trillion, which was a classic case of being indicative myself. We peaked at 837 and that was it. That call was incorrect. We had the view that this was going parabolic and at some point it will reverse, but it's difficult always to know when that reversal may come. The first warning was this abrupt sell-off and twitchiness, and then the marginally higher high here. By the way, I must say this is logarithmic chart, so it's percentage based. That's why that represents 250 and that only represents 837. And for that reason, we are looking at everything as a percentage move, so that we can have a chart that is less than just really flat with huge spikes. Okay, so what then ended up happening is that we essentially had a head and shoulder here. I put the two little green flags on the left shoulder and the right shoulder for you, and the market cap apex, which was essentially around 840 billion, and literally turned very shortly after I did that 1 trillion, hey, we could see 1 trillion call, which points to we were all just in the upside move. And as I've already suggested, whilst we expect a pullback, the momentum just seemed really strong. But that was your warning with your left shoulder. Then that sell-off, this was your late bulls buying the damn dip for your right shoulder. We actually got our first inverted HVF over there that performed to that target. And that was then the warning. The head and shoulders, utilizing HVF method, which only allows for horizontal necklines, would have been here, and that line is in fact the same length as from there to there. That's the difference on your log scaling. I can show it to you as you move it. You can see it shortens. That's because of the log scaling, guys. So understand, this is not a hall of mirrors. I'm not trying to make a fat man look thin. Okay, so anyway, so that's your rally return move to the neckline. That was a prominent level, that target, and it looked like it would hold for a while. You ran through it, rallied back up, and then you came to the next key level of significance, which was the original target of this upside HVF. And that was around the 250 billion mark. You rallied really strongly off the 250 billion mark and went almost back to 500 at 471. You came down a second time. This time not so robust, bounce again. This was all part of what I would describe as a rising wedge structure that instead of getting to 471 only managed 305. The third knock on the key level of significance, the legacy target, fell and you broke it on the third. This then led to the HVF method head and shoulders pattern being run here at the 215. That's right, from 837 with a neckline way up there at 530, you ended up with a 215 call that was made. And that led to that being your target being made on that original head and shoulders. The rally then rallied, couldn't quite make even the previous key level and spilled again, and this brings us as to where we are today. Note the extremity of low volatility here. Note the extremity of low volatility here. It begets a key move. In fact, that was extremely low, and this is literally the sole spoiler in the Tether Bitfinex narrative that raised it up and has since seen it drifting in a very low volatility sense to the downside. So on Ethereum, for example, we had the same upside HVF. You'll see it again also in the alt caps that I will be doing excluding Bitcoin, and it was run on Ethereum. This showed that Ethereum had a higher beta upside and a harder smash down. So this is a key level of significance or zone. There's 3 lines here. But why are targets targets? Targets are targets because they're good places to take money off. You get what I call in HVF method parlay progress decay. You cease to make one-sided progress in the original direction you took. For a while, you get a lot of time, a lot of churn, and a lot of lack of progress, either to up or down. You can get rallies. If you were bearish, it's no longer a good time to be bearish. Does not mean it is therefore a good time to be bullish. And I will go into that further. Note how since running this target here, you are essentially very much at the same price level, give or take a small amount. 214, and today you are sitting at 208. So literally 6 billion out of 214 billion is your variance since you first ran that target in the 10th of August. That's right, all of August, all of September, and all just about of October, and you haven't moved 6 billion as of this day on any great variance degree. Okay, at your furthest you might have been down a little bit more there, and on your highest a little bit more there, but in actual fact today you are 6 billion away from that 214 mark. That is a very low percent. It's about a 3% deviation. Hence, if you were a bear, it would have been a frustrating churn. Also, we remember, and we always work on, there's a cost of carry of trade. You could have been short the S&P index into October, as we'd warned, that would be the 34 months. Your capital has an opportunity cost. You might be using leverage. You might be paying an interest cost. That was a very good bear profit take. However, going back to, does that now mean you should be bull? No, it doesn't. What it means is it's not ostensibly strong bear anymore. You will have a period of progress decay. Once that progress decay period is over and the churn is over, your bias should remain in the original direction of the performing patterns. This is the law of keep on keeping on. That is HVF method. In other words, you will get one wrong when there is the reversal. You always trade the continuation. So you've traded with a head and shoulder. The original momentum is still there. You've traded the head and shoulder. You've closed at your target there, for example, and now you sit back and you wait for further inverted downside setups to continue to trade the bias view. Now, what would change that and make you turn bull? The setting up of a reversal pattern would do that. By the way, trading reversal patterns, lower probability of success. So just because you get the setup for the reversal pattern doesn't mean it's going to perform. So it is still a high risk, but if you don't even have the reversal, you should not at all be buying. And this is the problem most people have. So even with the potential for a reversal pattern, the risk is higher that you don't get the reversal that you expect. So this is some of the key philosophy points that people without a method fail to sometimes understand. In terms of HVF method traders, we've had a HVF method head and shoulder perform to target, which is a bearish positive affirmation for bearishness. And all it means is you took money off because you're going to have a period of progress decay. The bias remains bearish. You've just had positive affirmation from the price behavior saying you were right to be a bear. Does everyone get it? I hope so. Okay, so then you get into this structure over here, which is essentially churning around that original target. It could reverse, and in some cases it does, but it's the minority view. you start to have a slightly higher possibility of it reversing if you get reversal structure. So what could be a reversal structure here? So if I took it real quick and easy, I would say you would probably not have scope with the price behavior that you have for a double bottom or anything like that. You're probably going to be looking at a complex inverted head and shoulders, where that line where you kind of supported on the 240,000 mark, you just ran, it's quite a key level. It's very close to being our target of the official target of the original move up that overperformed immensely. And remember, by the way, another key point of HVF method, chronic overperformance begets a sustained period thereafter of underperformance that will wear you out. We had a similar structure for gold, very similar structure for gold and silver that we called. We called for 1,300 gold when gold had only traded above 1,000 once before for a very short period. We did it at $680. And we said that low, it's going to come back up. You're going to have a breakout. You're going to go to all-time highs on gold. We had a target of 1,300. It overperformed chronically and went to 1947. I was like, what the hell? I took my money off at 1,300. It was, of course, a first setup in a new trend. I'd failed to identify that. I could have stayed in longer. But the chronic overperformance has put that precious metals market in a sustained, frustrating, always hoping for the rally bear market that has been killing retail traders buying the goddamn dip. I was a cheeky bugger. I put out a silver chart with a little tick and move up with a magnifying glass and said, has Peter Schiff called for the new precious metals rally market? Silver at the same time went from $18. I had a target of 31. We took that. I again failed to trade for overperformance. It went to 49. And I was like, damn, you know, it's almost like real FOMO. But after that overperformance, it begets chronic underperformance. Look at, and I like to use the UFC, Conor McGregor's 11 seconds knockout of Aldo. Chronic overperformance leads to hyper overconfidence and biting off more than he can chew, gets choked out by Nate Diaz. Then he shows up, he gives Eddie Alvarez a hiding, makes him look hopeless, and next thing you know, his next UFC fight is against Khabib, and he gets tapped out and is chronically outperformed. So the fact that you overperform and really dominate in one venture sets you up for a period of underperformance. Charts are like that, people are like that, charts are people, and it is human action in play. So what have we got? People will get frustrated by buying dips continually, as the precious metal bulls have done since 2011. Guys, since we first had our rising upside HVF, and you can go look at the charts on the big time frame. I'm not getting the precious metal charts up. I've done it before, but it is such overperformance. You should have taken that overperformance and you should have stayed net bear forever for a sustained period. Yes, it's slowing down. It's grinding down. It's doing kind of like this. So it came down hard. It's getting lower volatility. It's not the beginning of the bear market anymore by any means. But the bias should still remain bear, and it's going to frustrate bulls for longer than they realize. It's going to frustrate bulls for longer than they realize. When is the next key levels of significance to the downside? Here, probably at the funnel, and it could be run. Remember, Ethereum has already broken its big super macro upside HVF that we called, that also got chronic overperformance. It was at the 200s. We had a target for around 700, 750, and of course it went to 1,400 Ethereum dollars per Ethereum. Okay, so that's where we stand. This exceedingly low volatility begets a move. So when people are getting most bored, most frustrated, some are leaving the game, that's when you're going to get something happen. And in fact, the less people that are engaged, the easier it will be to push the market strongly up or down. So the move that you would need to change to a higher possibility of bullish. So I'm not just bear because I want to be a hater. We're indifferent. We want to trade what the market chart is giving us, not be specifically biased with a view, unless it's a technical bias that is getting positive affirmation. So if we got a strong impulsive move out of this low volatility to the upside instead of to the downside, it made approximately this level and then had a gradual easing, I would leave that move on the table. I wouldn't be hectically long during this period. You're going to let the market show you what it will do. It'll always give you another chance. You might get a soft right shoulder, and then if you start to see some form on a lower time frame of bullish setups, you could then say, okay, we might be trading the inverted head and shoulder, left shoulder, head, right shoulder. And that is still higher risk, because you're trading a reversal pattern after a prevailing bear, and they often, the first ones, can fail. So that would be a high risk trade, but it can also succeed, and then you can get a move up. But until such time as that happens, you should be bear bias. This is where I'm at. Most people are bullish. They'll talk about institutional money coming in. They'll talk about this. By the way, I don't see that particularly as a good thing. Bitcoin is going to become controlled and owned if it wasn't already from the beginning. But that's one of my Reset Sniper clips. You can go watch that separately. We'll keep this technical. So why don't we have a look at the altcoins excluding Bitcoin anyway? So here you have the altcoin market. This excludes Bitcoin. As I've already said, the biggest altcoin in the lot has actually already run this key level of significance for its own chart, which is bearish. That means it's invalidated what was an upside. You can see its targets, flat bottom here, supported once, supported again, supported, grinding, and it let go. This was terrible structure. We were short. We did very well during that period. Here was your possibility for left shoulder, head, and right shoulder, and it fell away instead and actually broke that ascending upside. I'll drop the time frame just now, and is now here. This is too big a right shoulder relative to the left for me to feel comfortable. Even if it went strongly up from here to the neckline, this right shoulder, while it didn't go as deep by a couple of dollars, is much bigger and broader. And once again, I wouldn't take a very lazy right shoulder that is hanging deep on a reversal trade against the super macro trend that has continued to serve you very, very, very well. So please, you make your own choices, but this is the sharing of our view. You also have head and shoulder structure over here, and you can go and play with that yourselves. Okay, but let's stay here. So we actually have already supported once just on that funnel and bounced off it, and I suspect there is possibility that we could test here again. So the bias remains bearish. Is the bear market longer standing? Is it still young and fresh? No, 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 but go and have a look at what gold and silver have done. It's just been lots of bear setups that part break, part don't make targets now, getting tired, but still sell off again. Don't make a target churn, go really low vol for a while, small rallies, and then set up another bearish part, make target, but don't quite, then rally. It's a frustrating old time in the gold markets and silver markets. I'm not saying it has to be identical here. Crypto days are much longer periods. They're like dog years in terms of gold. What's taken 2011 till virtually 2019 to happen will probably happen quicker in crypto, but it still could run into 18 months, a year, even 2 years. You might not want to hear that. I'm sorry. I'm not here to tell you what you want to hear. I'm here to tell you what could be and how it might be. So let's have a little look at this. Now, if you're looking at this and you want this to be a little upsize squeeze, I've got news for you. I don't think it's going to turn out the way you want it on the altcoins. And the altcoins are going to need Bitcoin to be playing the game. This little upside squeeze with its target has been a key level. It's barely been able to hold it for a long time, including with the Bitfinex pump spike. And I suspect this has quite a lot of the Tether Bitfinex risk in it, squeezing along that. Couldn't hold, back up to it, couldn't hold, back up to it, can't hold. Little red grind line on that. You thought that was going to be upside, and it spilled. And I would suggest again the same. That is the line I'm referring to. We can also make him red. And I think you're looking at something very similar here, squeezing up against this horizontal level. Something's got to give. Every time you're getting there, the selling wicks show up. So how does it resolve? On balance of probabilities, bias bear. You've already invalidated this funnel, so you normally rally after that, but in longer run, you revisit and run deeper. So for me, it's a running deeper. If you look at these shorter time frame OBVs, there's distribution, it's coming down. It's one of the rare indicators I use because it has volume data in it. You can learn more about that on our mini course and in far greater detail on a trading metamorphosis program. In fact, looking forward to doing our next program this November with all our booked guys. We've got a lovely destination, and even our accelerator, our super advanced guys are going to be visiting, and they're going to hang out with us for a few days after as well in a lovely environment. Anyway, all that aside, altcoins looking weak to break through here, which will also depend a little bit on Bitcoin. So they do follow Bitcoin. This is why we start with a Bitcoin chart. But even here, my bias on this low volatility is a spill heading towards this funnel level. If you were to sell off from 209 to 175, let's call it 210 to 175, it would be a 35 loss on 210. You've got to divide that by 2. It's going to be another 17.5%. It's not going to be welcome. 17.5% on Bitcoin if it's at 6.4 at the moment. Call it 6.5 just for mathematics' sake. It's almost 20% at its worst. You're looking at the better part of $1,200 on a 6.4 target. That's if it just gets to the funnel or the legacy funnel level and supports there. It could run through the stop at 160. So I would be biased short, and that is the reason for why I'm biased short. This is not advice. This is a small synopsis on how we assess charts and how we develop biases. And the first time you are wrong and the market tells you something differently, then you take that as a feedback event, and you then become neutral instead of bullish, and you get a second bullish event after you are neutral that takes you up to this point, for example, and sets up a soft right shoulder. Then you're getting ready to bias long, and you may trade a reversal, although, as I've already said, it will still be higher risk in the same way this original reversal was higher risk. But look at the reward. Something else to point out, and this is something unique about our method. Look how quickly, when we took that target, where are we now? At 209. You were in November at 209 market cap, and that was all-time high November last year. And then you went from 209 to 837 literally on the January. I think it was 7th of Jan that you've got there for that high for total market cap. 7th of Jan, and you were roughly where we are now. In fact, the first time you touched that was in 8th of November. 8th of November to 30th of Jan, you were up. So if we look at how quickly we got there, and now we look at how slow we are bleeding out, it did take, here was the break of the head and shoulder move. That was 30th of Jan. That was our official triggering event, 30th of Jan, and the target made was right in August. So this is literally a 7.5 month event, while this was literally a 3-month event. So you can see that the bullishness was highly, highly explosive, while the bearishness has taken a while to play out. This feeds into our super macro time frame view that on balance of probabilities, crypto as a whole is an expansive universe and is a super macro bull. Your monthly chart is a bull. Your monthly chart is a bull. Your super macro for cryptos is expansive. This is not me. I'm not a hater of cryptos. And I'm just reading it technically. I'm saying this is an expanding market and will continue. I think that 1 trillion call will come good. It was just too early. And that is the take. So cryptos too expand in market cap. There will be a bull market again, and it will expand potentially hugely. You did in 3 months with the enthusiasm of what's now taken the better part of 8 months to unwind. But this does also highlight people. Serious FOMO, serious regret, long period to lick those wounds and to get hurt and to recover. Burnt fingers. So the pain cycle, there's even a monk who worked out a cycle of mourning for speculation in markets. It's fascinating psychology. Anyway, so that's where we stand, and that's my take on crypto. This is what will turn me into, okay, we now have that neutral point where we have a potential reversal event. And you might want to consider biasing bull. As yet, it hasn't happened. The bias remains bear. That's me. I'm Francis Hunt, the market sniper, the crypto sniper. 31st of October, we're doing something brand new. Brand new on 31st of October. You could, those who haven't been able to afford our big programs, there will be a self-study option which will allow you a small amount of interaction on non-farm payrolls, and on newbie front, there will be an option for you and an offer at the end of that at a different price point. And we will cover the formula for success, as well as it's not what you make, it's what you keep. The formula, there is a process, mathematical formula for being successful in trading. That webinar, 31st of October. Do not miss it. Trading is not for everybody. Thanks for watching the video. Play safe out there, and none of this is purporting to be advice. Build your own method if you don't like the idea of mine, and adhere to it. And money management is the boss. Learn to take small losses and stay in the game. Okay, bye for now, chaps.